Alright, good morning and welcome back everyone. I hope the audio, video and I hope you are doing really well. Guys, we are looking at the CA Inter Fast Track course and we are at the fag end of this course. We just need to do a couple of more chapters and then attack the sums back to back for you to get a good understanding of what to expect and what to do in the exam. So what are we doing today? Let me tell you the agenda for today. The agenda for today is very clear. We are going to do a chapter which is called TDS, TCS and Advanced Tax. Very interesting chapter. Also about 6 to 8 marks every year are asked from this chapters. So TDS, TCS and Advanced Tax. These three chapters will happen today. And we will also do a chapter called Return of Income. Guys, Return of Income is that small chapter in the end which people tend to not pay so much attention to, because first it comes right in the end. People get very tired that I have done so many chapters already and they tend to skip this, but no, we are going to do this very well. I'll take you to the quick book and I'll help you remember some amendments. A probable question from this is highly expected because some recent changes in the act. And of course there is a chapter called Computation of Income. That chapter of Computation of Income basically has a lot of small aggregation of all the different chapters. It's honestly not a new chapter. This one is the same chapters. This is the aggregate of all the chapters. So these three things are what are on the agenda today in today's session. Very interesting session, and we still have one more session pending. So after today, whichever the next day I plug it in, we can do back-to-back questions, MCQs, etc. and get really good at what you want to get really good at. That is CA Inter and that is tax. So adding a slide and starting off with on a really good Monday morning note. Let's do this very well, guys. Any doubts, any questions, you can always reach out to me. Otherwise, we are good to start. So first, let's understand what is this concept of TDS, what is this concept of TCS and what is this concept of advanced tax. Guys, there used to be a time where you would earn money in the previous year, that is, let's say the previous year is previous year 21-22. This year was only dedicated to earn money, and then the government would assess you in the next year, that is the assessment year 22-23. where you would file the return and pay the government taxes. And then this government suddenly realized that why should I wait for one whole year when you are earning income here? Why should I wait till this year to earn that income? So they devised a very smart plan that the TDS, TCS and advanced tax has to be paid while or during the year that you are earning. There will be tax deducted at source, tax collected at source, and you will have to pay advanced tax, so that the government does not have to wait and most of the taxes are collected in this year itself. Honestly, it's like going to a restaurant and paying your bill. When you pay your bill, let's say your restaurant bill is 1000 rupees, and when you're paying it, can you use cash? Yes. Can you use debit cards, credit cards? Yes. Can you use Paytm, Karo? Yes, you can use all of that. Same way, it's not different. You're still paying the same electricity or same restaurant bill. Same way, TDS, TCS, advanced tax are not different taxes. They are the same taxes but paid differently. So it's the same income tax but you're paying them differently, like called TDS, TCS or advanced tax. Lots of shortcuts waiting for us in this chapter. So watch out, one after the other, one section we will do and we will knock them out really well. So as you know, guys, we are still moving ahead on this example of the surgeon. And let's try and see the most simple TDS section first. I'm just going to show it on the slide and then I will come back. So here is the surgeon, guys. He is going to go for a bet. He is doing some lottery, or he is going for betting, or he is going to KBC. So this is KBC and this is the surgeon. If you watch that episode of KBC, the surgeon wins 10 lakh rupees. Congratulate the surgeon, guys. He wins 10 lakh rupees on KBC and he's very happy that he's won 10 lakhs, but in his account he only gets 7 lakhs. So when he asked the government what happened, or even asked KBC what happens to the remaining, he said that the government has told us that because you have gotten lucky, the government also wants to get lucky, and they asked us to deduct TDS at the rate of 30%. So this is the section 194B. B is for betting, guys, that's the shortcut. B is for betting. In 194B, the TDS rate is going to be 30%. That's a high TDS rate. Yes, one of the highest TDS rates. Why? Because if you've gotten lucky, the government also wants to get lucky. They will obviously take your PAN number here. So they will take your PAN number, and don't worry, whenever you finally pay your tax, you can take a credit. I'll show you how you take a credit, guys. But this is TDS at the rate of 30%. If the amount that you earn is more than 10,000 rupees, that means if in KBC, if you win 7,500 rupees, will it be taxable? Yes. But will there be any TDS? No. TDS will be only about 10,000 rupees, TDS at the rate of 30%, and they will take your PAN number and they will give it to the government. Guys, everyone, very patiently, I'll tell you the logic behind this. Now we are looking at the surgeon's income. So let's say the surgeon has income from his surgical business, let's say 15 lakh rupees. This is his PGBP. And now we want to add his casual income, that is the KBC income. Always add the gross income, that is 10 lakhs, not 7 lakhs. Why 10 lakhs? I'll tell you the logic behind adding 10 lakhs. But remember, guys, always add the gross income, that is 10 lakhs. If in the exam they give you that he's got 7 lakhs rupees net income, always gross it up and add 10 lakhs. So on 25 lakh, that's assuming that's his total income, he will land up paying tax up to 2.5 lakh rupees nil, from 2.5 to 5 lakh at 12,500, from 5 lakh to 10 lakh at the rate of 1 lakh, and from 10 lakh to 25 lakh on 15 lakh at 30%, that is 4 lakh 50,000. So he will land up paying about 5 lakh 62,500 plus HEC. But when he is paying that, the government will give him a credit of 3 lakh rupees. Why? Because 3 lakh rupees is the TDS which has already been deducted. So remember, guys, TDS is not an additional tax. It's the same tax that you are going to pay. You pay and then you take a credit. And always remember, in your income, it's always the gross amount. So this is how you understand the calculation. This is a very simple section 194B, that is betting. Now, same logic, same calculation. I'm just changing the person in the middle. The person in the middle now is not KBC, but it is a horse race company. So you've gone and bet on horses. So in case of horse races also, it's the same thing, only the section changes, because now it's called a bigger bet. So it's 194BB. BB means bigger bet. And in that case also, guys, TDS is at the rate of 30%. In that case also, only if the amount is more than 10,000 rupees. And in that case also, you need to give your PAN. So can I say 194B and BB, that is bigger bet, are the same? Yes, they are the same, but only on different incomes and different casual incomes. So I'm just going to go back and I'm just going to write the TDS sections. The TDS sections actually start at 192, but I have started at 194, 194B and 194BB. Now let me talk about the other side. When the horse race or KBC, they deduct this 30% tax, by when do they have to pay to the government? They need to pay the government by the 7th of the next month. So that means, is it immediately you need to pay to the government? No, you don't need to pay the government immediately. You need to pay by the 7th of the next month. So if this is the month of March right now, and you deducted in March, you'll have to pay by 7th of April. So this is what you need to do. Every month you need to pay by the 7th of the next month. All right. Perfect. So this is the 7th of the next month. What happens if you don't pay on time, I'll tell you. But generally, guys, 7th of the next month, but it is on payment basis or credit basis. I'll tell you the difference. Guys, these are basics. If you understand the basics, then all the other sections go very smoothly. Let's say you won this on the 1st of March, or let's say you won this on 28th of February, but it was paid to you in March. So whether your account is credited in your books of accounts that time or when the payment is made that time, whichever is it, generally it is earlier of the following, earlier of P or C, but in 194B and 194BB it is on payment basis. So whenever the payment is made to you that month, the next month 7th, they have to pay to the government. So both these are on payment basis. Yes, in fact, the first few are on payment basis only, which we will discuss. 194B and 194BB are both on payment basis. Perfect. Guys, this is very, very simple, very easy to understand. I'm also going to upload the quick book here, and I'll show you these from the quick book as well. Just 1 second. In the quick book, I have put a table only. In that table, I've summarized all these. So here we go. No, this is the perquisite table. 1 second. Perfect. Here guys is 194B bets. Payment by everyone to everyone, TDS at 30% if the casual income is about 10,000 per payment. Guys, if it's less than 10,000, it is still taxable, but there will be no TDS. TDS on payment basis. If paid in kind, then payer to ensure TDS payment before releasing the winnings. Exactly, good thing that we are reading the quick book because we don't miss out on anything. If the amount is not paid by KBC in cash, but it's paid like a car, you win a car in a quiz contest, then the person who's giving you the car has to ensure that TDS is deposited with the government. How will they do that? Let's say they're giving you a car worth 10 lakhs. They will ask you for 3 lakh rupees, you have to pay it and they will pay to the government. So, but they have to ensure that the TDS is paid before releasing the winnings. And 194BB is bigger bets, is basically for horse racing, about 10,000, TDS again on payment basis. I'm just writing a P here, because these are on payment basis. Okay, now going back guys. So 2 sections done, going to the next section. Watch out for the next section. Guys, in our example of TDS, the surgeon starts a cafe called Calorie Cafe. This is a cafe where every time you want to go and eat something healthy, this is the cafe that you will go to, and the entire TDS chapter works to the example of Calorie Cafe. So let's take the first example. The Calorie Cafe has done really well and it has expanded to many cities of India, and it has 192 employees. As you know, employees are called slaves, or I like to call them slaves. So these are 192 slaves, and Calorie Cafe every month pays them salary. While they pay them salary, the government says, listen, salary is taxable. Why should I wait for the next year for them to file their return? So while you pay them salary, why don't you also deduct TDS and pay to me? So this is salary and this is TDS. Alright. Now the section is section 192 for salaries. Very, very interesting section 192. This is the only or one or two only sections under 192 where if you pay salary, this is TDS on salary. Guys, it is a big joke that every month when you get salary, in fact, I remember my first salary at PwC, and I was told I will get a salary which is, let's say, around 60,000 rupees per month. But when I actually got my message SMS, I actually saw that it was about 40,000 something. So I felt a little disappointed, and that's when I suddenly realized that TDS is now real. It's not just a concept in an exam. So TDS on salary is basically under section 192, and what rate is it? It is not on 10%, 30%, 20%. It is something called average rate. I'll tell you how this is calculated. Wait for it. I'll tell you how this average rate is to be determined. Not very important from an exam perspective, but you should understand it. They say whenever they are paying salary to you, let's take 2 examples. Let's take the watchman of Calorie Cafe, and let's take the chef of Calorie Cafe. Let's say the watchman earns 10,000 rupees a month. So they will, Calorie Cafe will ask him what is your income. So he will say my salary is 10,000 rupees a month, that is 1,20,000 rupees. After deduction, standard deduction, etc., it becomes only 70,000 rupees anyways. So he will say his salary, let's say, assume guys, after deduction also it is 1,20,000. Then the Calorie Cafe will ask him, do you have any other income? He'll say, no, I don't have any other income, but I deposit into my PF account, let's say 20,000. So you minus that. So you basically become their CA and you find out what is their total income. As per this total income of 1 lakh, the watchman does not have to pay any tax because it is below the basic exemption limit. So hence, there will be no TDS in this case. So whenever you are paying the salary to the watchman, pay his entire salary, don't deduct any TDS. But on the other hand guys, let's say the chef has a salary of 12,50,000. After the standard deduction, it becomes 12 lakh. So his salary income is 12 lakh. The chef was asked, do you have any other income? He says, yes, I have rental income. I have given a house in my hometown for rent and I get, after all the deductions, I get 3 lakh rupees from it. So his gross total income is 15 lakhs. You can also ask him if he has any losses, but only and only house loss, house property loss. So let's say on this house that is rented out, let's say he has a loss of 1 lakh rupees. So you can also minus that. Basically you become their CA. Again, let's say if he is contributed to PF, etc., you can also minus that. And after minusing that, let's say you minus these two. So 12 plus 3 is 15. 15 minus 2.5 is 12,50,000. This is his total income. You will calculate his tax. Example, on 12,50,000, on the first 2.5 lakh rupees 0, then 12,500, then 1 lakh, and then 75,000. So roughly about 1,82,500 plus cess. That is the tax that is he is supposed to pay the chef. So we'll total it up and we'll assume guys his tax payable is 1,85,000. This divided by 12 is the tax you will deduct every month, and that's what is meant by average rate. So average rate is basically depending upon employee to employee. For every employee, you know their salary, you will compute the salary, of course SAP minus SEP. You will do all the calculations like whatever they invest, whatever they are telling you that they will invest, you have to, on that basis of their declaration, you have to take into account those ATC deductions, etc., health insurance, etc., and you have to become their CA and you have to do this calculation. So it is an average rate. Next, it is on payment basis or credit basis, whichever is earlier. So typically TDS is basically payment of credit, whichever is earlier. That means if the salary is paid in March but the credit happens in April, then in that case March will be considered. So which of these will be earlier will be considered. As you know guys, the payment has to be done by the 7th of the next month. This is constant for all TDS sections, except a few which I will clarify. Payment or credit, whichever is earlier. And guys, here you need your employees' PAN details because the government should know whose TDS they've got. So you need to give the government the PAN details of the slave. And if you don't get the PAN details, let's say your employee says I don't have PAN number or I can't give my PAN number, then there is a punishment. If no PAN, then they will be taxed at a rate called the maximum marginal rate, which I will show you what is that, MMR. But if no PAN, then there's a punishment. Why is this punishment there? Because guys, if you don't give a PAN, it's almost like you giving your CA inter exams but not writing your roll number. If you don't write your roll number, how will ICAI know whose paper it is? Same way, if you don't give the PAN, how will they know that whose money this is? So hence PAN is absolutely important. Just one second. Perfect. So your PAN number is absolutely important. Otherwise, you'll have to pay MMR. Now, let me tell you what is MMR. I'm just putting it here. Maximum marginal rate is the highest rate an individual has to pay. Example, the tax rate is 30%. On that, you will charge a surcharge of 37%. And on that, you will charge a cess of 4%. So that basically, if you do 37% of 30, and if you do 4% of 37 and 30, you will get 42.744%. So this is the maximum marginal rate, and this is what needs to be paid in case the PAN details are not given. Perfect. I was just taking you through the quick book now. This is section 192. Important, yes. Here we go. Everyone pay attention to 192. Employer is paying salary to an employee. Every month while paying salary, employer has to deduct TDS. Just 1 second. Yes, every month while paying salary, employer has to deduct TDS. Employer has to calculate the average tax of the employee by taking details of the employee's other incomes, tax deductions, loss only from house property, and whether he's opting for 115 BSc, which we will study together. On that basis, you have to calculate the TDS, and TDS is on payment basis. If no PAN, then at MMR. This is payment of credit basis. There's a small mistake here. Payment of credit basis, and no PAN, then MMR. Guys, this is section 192A. I'm just going to add something here. Just 1 second. Yes. Instead of going back and forth, I'll explain the slides here only. Guys, we've finished 3 sections already. 194B bet, bigger bet, and 192, which is salary. Now guys, here is calorie cafe. And here are the slaves or the employees which we just saw. And here is the government. Guys, every month Calorie Cafe or your employer would deposit some amount in your PF account. If you remember guys, a provident fund account, which we have done in salary chapter, is an account which is maintained like your bank account, but it has to be used only when you retire or when you leave the company. So they were maintaining an account called the provident fund account, these slaves. They would also put money in that account, and Calorie Cafe as an employer would also put money in that account. Now I'll tell you what was happening is some of these employees wanted to do Aram. They did not want to work too hard. So there is a section called section 192A. A is for Aram. They wanted to relax. So what they did is they went to the Provident Fund Authority and they said that we want to withdraw the money from the Provident Fund. We can see that we have some money in the Provident Fund. We want to withdraw. Guys, from salary chapter, we have seen that if it is SPF, Statutory Provident Fund, which basically maintained by government authorities, withdrawal is exempt. But in case of RPF, Recognized Provident Fund, if you withdraw within 5 years, then it is taxable. And if it is taxable, the government wants TDS also on it. So this is what we are talking about. Section 192A is TDS on premature withdrawal of PF. It's called premature withdrawal of Provident Fund. SPF is exempt, so it does not apply to SPF. RPF within 5 years. After 5 years you withdraw, there is no taxability and hence no TDS. So TDS on premature withdrawal of Provident Fund. Guys, now let's see the rate. So whenever they pay you money, this is the PF amount. They have to deduct 10% and pay to the government as TDS. So the TDS is at the rate of 10%. Guys, most common rate of TDS is 10%. So here also the TDS rate is at the rate of 10% on premature withdrawal of PF account. Now let me give you an exception, guys. Of course, you know, after 5 years withdrawal is not taxable and it's not taxed. There is no TDS. Almost like when you go to a wedding, there is food, but because there is free food, there is no bill in the end. Same way, if it's not taxable, there will be no TDS. But in the 5 years also, if it is because of unemployment, you are unemployed because your company shut down or because you had some illness or accident, then in those cases, you can withdraw the amount and it will not be taxed, and if it's not taxed, there will be no TDS. Guys, this one again is only and only for employees. So you should give their PAN details, and if you don't give their PAN details, then they will charge MMR. So it will not be 10%, but it will be MMR. Guys, this is 192A. I'll give you the shortcut. 192 is employees. Employees wanted to do Aram. This is premature withdrawal from PF account within 5 years. If you withdraw after 5 years, no TDS. If you withdraw within 5 years, but because of these reasons, no TDS. Otherwise, TDS is at the rate of 10%. If no PAN, then MMR. Let's have a look. 192A is Aram, Provident Fund Authority paying money to an employee. If the amount is withdrawn from the RPF account within 5 years, then TDS at the rate of 10% if the aggregate amount is greater than 50,000. I forgot to mention this, that the amount withdrawn should be more than 50,000. So basically it should be a sizable amount. What if it's below 50,000 or up to 50,000? Then in that case it will be taxable, but there will be no TDS. If no PAN, then taxes on MMR. Exception, no TDS if amount withdrawn due to loss of job, due to closure of business or disability or illness. This is 192A. Alright, so we're done with 4 sections already. B, BB, 192A and 192. Guys, as and when you go ahead, the story continues of Calorie Cafe, and you'll do all the sections with me using this same concept. So be with me. 1 second. Perfect. Guys, moving on to the next one. The next one is really interesting, guys. This is Calorie Cafe. I'm going in a pattern which I think is important, so be with me and we'll complete all the sections slowly and steadily. Guys, Calorie Cafe is like a new restaurant or a new cafe in your town, and whenever a cafe starts, they don't buy a property immediately. They don't buy furniture, everything immediately, because what if the cafe does not run well? So they rent it out. So initially they rent. So Calorie Cafe also did the same thing. This is the owner, and from the owner they rented land and building. From some owner they also rented plant and machinery, and from some owner they also rented furniture. So basically there are 3 things that you've rented out: land and building, plant and machinery, and furniture and fixtures. These are 3 things that you have rented out, and if you've rented it out, obviously you will be paying them rental money. So you are going to pay rent for land and building, rent for plant and machinery, and rent for furniture. When you pay them, the government is here, and the government says that, listen, whenever you are paying this rent, why don't you also deduct some TDS and you pay to us, because we know that rent is taxable. So hence, why don't you deduct some TDS at the rate of 10% and you pay to us. But in case of plant and machinery, you deduct only 2%. So land and building 10%, furniture and fixtures 10%, but plant and machinery is okay, you deduct only 2%. Guys, this is section 194I. I is initially you rent. So you can't buy, so initially what do? You rent, so that is section 194I. Guys, here the TDS will be deducted at the rate of 10% or at the rate of 2% only if the amount paid, only if the rent payment is greater than 2,40,000 per annum. So it has to be 2,40,000 per annum per person. What do I mean by that? Let me explain. If for land and building you are paying 2,20,000 to Mr. X, let's say the owner here is Mr. X, and for land and building you are paying 2,20,000, will there be any TDS? No, because it is not more than 2,40,000. But if to the same owner you are also paying 60,000 towards plant and machinery or 80,000 towards furniture and fixtures, that means per person is it going more than 2,40,000? Yes. So in that case there will be TDS. So you have to aggregate it, all the 3. Yes, if it's to a person you have to aggregate it. So hence remember, per annum per person. The TDS has to be deducted either on payment basis, so whenever you pay, or on credit basis, that is whenever the amount is credited, whichever is earlier. And of course by the 7th of the next month you need to pay to the government. And here also the government should know whose TDS have they got. So hence you need a PAN. But if PAN is not given, guys, standard MMR is only in two cases, that is employees. Why? Because for your employee, if you don't know your PAN number, that's a big offense, and hence MMR. But if other cases, if you don't have the PAN, then 20% you'll have to pay under a section called 206 AA. How do you remember this? Guys, if you don't give your PAN number, are you always anonymous? Yes. So the shortcut is always anonymous. So under section 206 AA, you will have to deduct TDS at the rate of 20% in case PAN is not given. Alright, let's have a look, guys, at this section, that is 194I. Yes, I. Initially you rent any person except small individual, small HUFs. I forgot to mention that you don't need to deduct TDS if you're a small, if instead of calorie cafe, guys, you rent a house or you rent some furniture or you rent some plant and machinery, then you are called a small individual and small HUF. Let me just tell you, there is nothing like small individual, small HUF. This is only a shortcut for you and me to remember. What is a small individual, small HUF? Whose last year's turnover is up to a certain limit. What is the last year's turnover? If the last year's turnover is up to, in business, up to 1 crore and in profession up to 50 lakhs, then you're a small individual, small HUF. Then this does not apply to you. So what is small individual and small HUF? Small individual and HUF are those people whose turnover last year was up to 1 crore in business or up to 50 lakhs in case of profession. So this is small individual, small HUF. Going back, any person paying except small individual, small HUF to any resident person, TDS at the rate of 10% in case of rent paid on land and machinery, so land and building and plant and machinery for 2% if the aggregate payment per person is about 2,40,000 per annum, so per annum and also per person. TDS on payment of credit, whichever is earlier. If no PAN, then tax at 20%. No TDS on GST. Good thing about the quick book, we cover everything. So that means if the person who's charging you rent, let's say is charging you rent on furniture or plant or land and building at, let's say, 1 lakh plus GST, then TDS is not on GST. TDS is only on the core amount. Guys, TDS can never be on GST. No TDS on lump sum lease payments. So if you're paying lump sum lease payments, example, you bought that land on lease for like 20 years, 30 years and you paid a lump sum amount, then on that there is no TDS. This is 194I. So 194B done, BB done, 192 done and 192A done. These are the things that are done. I've just put a tick mark so that we are well versed with what has already been done. Guys, once we finish the TDS chapter, we'll go back to back doing lots of sums, so don't worry about it. Right now is your time to just keep absorbing whatever you can from these examples and by heart the shortcuts as well with me. Alright. Now, this was initially when you rented it out. But now, guys, Calorie Cafe is set in that place. They really like that cafe, that place, and a lot of people have started coming to that cafe. So they become kind of popular. So now they feel that why shouldn't we start buying that place. So this is the owner, and they go talk to that owner, I want to buy this cafe because now I'm set here. Initially I rented, but now I want to acquire this. The owner says no problem, you can buy it by paying me 60 lakh rupees. So Calorie Cafe was paying the owner 60 lakh rupees. This is acquisition of immovable property. Acquisition of immovable property. Here is the government watching this transaction, and the government feels that, listen, while you are paying the owner will be subject to some capital gain, or we want to know who this owner is, because guys, this owner will be subject to capital gains. As you know, capital gains, AT, SCP, is there an asset he is selling? Yes. Is there a transfer? Yes. Is there a sale price? Yes. Is there a cost of acquisition? Yes. And is there a period of holding? Yes. So based on all these things, the government tells Calorie Cafe that, listen, Calorie Cafe, whenever you are paying that money to him, why don't you deduct a small rate, only at the rate of 1%, and pay it to me. so that I know who has sold an asset so I can go catch him. Guys, this section is called section 194IA. The shortcut is immovable property acquire. IA. This is section 194IA. This is only applicable if the price, not the stamp duty value, guys, if the price is more than 50 lakh rupees of a particular immovable property, then TDS at the rate of 1%. Only if the price is more than 50 lakh. In our example, let's say it is 60 lakh. So hence in that case, on the entire amount, never on the excess amount, on the entire amount, TDS at the rate of 1%. Again, you need to give PAN to the government. If you don't give any PAN, by the way, this is on payment or credit basis, whichever is earlier. Most things are on payment or credit basis, whichever is earlier. And if no PAN, then 20% again under section 206 AA. So the guys, the sections remain the same, the concepts remain more or less the same. Only thing, the section numbers and the TDS rates changes. This is TDS at the rate of 1%. But this does not apply in two cases. Which are the two cases? One, if it's sale of rural agriculture land. You know guys, rural agriculture land is not a capital asset itself, and hence there is no capital gain, and hence you don't need to know who's selling it. And compulsory acquisition, because for that there is a different section. So in these two cases there will be no, these are two exceptions, there will be no TDS under 194IA is not applicable. Let's have a look at the quick book, guys. 194IA. Here we go. 194IA, immovable property acquire. Any person to a resident person, TDS at the rate of 1%, and the sale consideration is more than 50 lakh. Remember guys, it's the sale consideration we are talking about, and we are not talking about any random number, but not stamp duty value, but sale consideration. Exception, if rural agriculture land or if compulsory acquisition, TDS can be paid within 30 days from the end of the month. Yes, I'll talk about this. And here TDS on payment of credit, whichever is earlier. If no PAN, then tax at the rate of 20%. Guys, what in the exam they say that you are paying 45 lakh rupees for the house and 7 lakh rupees for parking, then that parking, all the other fees are to be included to calculate that 50 lakh. Sale consideration includes club fee, parking fee, etc. All of that. Now just going back and just telling you that this, instead of calorie cafe, could be you. If you are buying a house, guys, tomorrow when you become a CA and you become a successful CA and you want to buy a house, you could be buying a house. So instead of calorie cafe, it could be you as well. And when you are buying a house, are you also supposed to deduct TDS? Yes, everyone. This applies to everyone. Small individual, small HUF, everyone. Yes. Now, because of that, it becomes very hassle-some to pay TDS to the government by the 7th of the next month. 7th of the next month is too quick to pay GST to the TDS to the government, and hence the government is saying that because this applies to everyone, don't worry, you can pay 30 days after the end of the month. So they've given you a slightly more due date of payment. Yes, they've given you slightly more days to pay because it applies to everyone. This, guys, is section 194IA. Remember, applies to everyone. When you're acquiring immovable property, the value is more than 50 lakh rupees. TDS is at the rate of 1%. Not on rural agriculture land, not on compulsory acquisition. All right. Perfect. Moving ahead, guys, this one is another section down. I'm keep marking it, whatever sections we've done. So 194I is immovable, initially you rent. 194IA is immovable property you acquired. Guys, very similar to this is the next section. As you know, guys, the calorie cafe is now set. They already bought that place and now they are running very, very well. And they are located at that location which they've bought. Now what happens is, in that location, same location, above that a metro is to be constructed. There's a metro line which goes just above that calorie cafe. So the IAS officer or the government department, they call Calorie Cafe up one fine morning and they tell the Calorie Cafe that, hey Calorie Cafe, we need to compulsorily acquire your cafe. One of them we need to acquire. So they said, why do you need to acquire? They said, we want to build a metro, so we don't need to take your permission, we want to compulsorily acquire it, but don't worry, we'll pay you market price. You bought it for 60 lakhs, we'll pay you 80 lakhs, no problem. So the government was paying them the government was paying them on compulsory acquisition. Compulsory acquisition is nothing but legally acquire. And here is the government watching this transaction, and they say that whenever you are paying them, you please pay to us also a TDS at the rate of 10% if the compulsory acquisition value is more than 2.5 lakhs. So guys, while acquisition, the rate was low 1%, but the threshold was high. This is the opposite, the threshold is low and the rate is high. Here, guys, this TDS is under a section called 194 LA. LA means legally acquire. If you legally acquired some property, then if the value of the property is more than 2.5 lakhs, then your TDS at the rate of 10%. So TDS at the rate of 10% if more than 2.5 lakhs. This is the concept of legally acquire. But because the government is paying you, or a government body is paying you, this is on payment basis, not on credit basis. This is only and only on payment basis. This is simple. So first you rented, then you acquired, and then the government acquired your Calorie Cafe. So this is how the trajectory goes. Let's see where is LA. Just 1 minute. Should be here. 194 LA legally acquire. Any person paying to a resident person, TDS at the rate of 10%. So rate is high in case of amount paid on compulsory acquisition of movable property above 2.5 lakhs. TDS on payment basis, and if no PAN, then TDS is 20%. This is standard now, guys. If no PAN, TDS is at the rate of 20%. Perfect. All right. Now going back, so you initially rented, you acquired, you legally acquired also. Now let's go to the next one. There are 3 of them which are going to happen together. Watch out, guys, watch out. Every time you wanted to acquire or rent some immovable property, again your Calorie Cafe, every time you wanted to acquire some immovable property, you need to rent some immovable property, there was a helper. Helper means nothing but a broker. There was a helper or a broker who would pay you, who would help you, and you would pay him brokerage. So this is you paying him commission or brokerage, someone who's helper or someone who's a broker. Why am I saying helper? Because the section is 194H, and that's why I'm calling it helper. Actually, he's a broker, or he's someone who works for a commission. The government says that, listen, whenever you are making a payment to him, why don't you also deduct TDS and you make a payment to me? And the TDS rate is at the rate of 5% if the amount is more than 15,000. Guys, there are 3 sections which have the same limits and the same amounts TDS. So here, guys, the section is 194H. H is for helper. So what are you paying? You are paying any brokerage, you are paying any commission, and if the amount that you pay is more than 15,000, then the TDS will be at the rate of 5%. The TDS will be at the rate of 5% if the amount that you are paying is something like this, more than 15,000 at the rate of 5%. Again, guys, you need to get the PAN number of the helper or the broker. If no PAN, then TDS at the rate of 20%. Again, payment or credit basis, whichever is earlier. Payment or credit, whichever is earlier. Next, guys, instead of a helper, there are 3 of them now. We've done H. There are 2 more. One is an insurance agent. Guys, people are scared of doctors' fees. People are scared of death. both are 194D. D is death or doctor's fees. So you take an insurance and the insurance agent, so I'm just making a small bifurcation here. This is the insurance agent and he is getting commission from an insurance company. So the government says, listen, when you're paying commission, why don't you pay us TDS also? It's the same, but this is brokerage or commission, but only for insurance agent. While this was general, this is only for insurance agent. It is the same, TDS at the rate of 5% if amount is more than 15,000. PAN number, otherwise 20%, and payment of credit, whichever is earlier. So this is also the same. That is the second one. They are very, very similar. 194D and 194H. H for helper, D is for death amount, insurance compensation or insurance commission. And last, guys, here these are lottery agents. They make you, they get you into habit of gambling. So if you go to a lottery agent very often, he will get you into habit of gambling. And this is a lottery company. The agents, how much ever they sell, they get commission from the lottery company. And while the lottery company gives them commission, the government says, listen, we want tax on this. So this is what it is. Again, guys, this is 194G because gambling. But rest everything is the same. Only thing is the section changes. This is commission on lottery. While the first one was brokerage and commission, this is commission on insurance and this is commission on lottery. Rest everything is the same, guys. Example, TDS at the rate of 5% if amount is more than 15,000. PAN or else 20%, payment of credit, whichever is earlier. So guys, in one shot you've completed 3 sections: 194H helper, 194D death amount and 194G gambler. Here we go. $194D is if you're scared of death or doctor's fees, and TDS at 5% if the commission amount is more than 15,000 per annum, and TDS on payment of credit, whichever is earlier. If no PAN, then tax at 20%. 194H is helper or broker. TDS at the rate of 5% if the amount is more than 15,000. Same thing, guys, everything is the same. But guys, H does not apply to small individual small HUFs. See, insurance and other commission, it cannot be small individual small HUF anyways. But this example, let's say you want to buy a house or you want to rent a house and you are paying brokerage, then it does not apply to small individual small HUF. You know who are small individual small HUFs, whose last year's turnover was up to a certain limit, those guys. And same with G. This is insurance commission, sorry, this is gambling commission. Lottery, TDS at 5% if the amount is more than 15,000 per annum. This is payment or credit, whichever is earlier. If no PAN, then TDS at the rate of 20%. So with that, we've completed 3 sections together, guys. 1, 2 and 3, 194H, 194D and 194G. Perfect. This is 194LA legally acquire, 194IA immovable property acquire, and 194I initially you rent. Now we are doing one of the most interesting and one of the most important sections, and then we will take a 5-10 minute break. But the next one is absolutely gold and absolutely important. Watch out, guys, everyone. This is Calorie Cafe, and they're having a big inauguration party for one of their cafes. One of the cafes is just starting up. So they're throwing a big party and all of you guys are also invited to that party. Let's see what's happening at that party. So Calorie Cafe, first of all, has engaged a caterer and given a contract to a caterer basically to serve. While Calorie Cafe only serves healthy food, they want all kinds of food, so they've kept a caterer. They've given a contract to a caterer. They've also given a contract to a decorator to decorate the whole place with balloons and, you know, signages, etc., neon, you know how the happy birthday is written nowadays behind. Same way they have given it to decoration. They've also asked an advertising company to make an advertisement and to play it on all television channels, radio channels, etc. They've engaged a goods transport agency, and again contract given to them to transport all the goods to the calorie cafe, all these decoration items, catering items, etc. And they've asked a gifting company to make a diary with calorie cafe embossed on it, and it's a very personalized diary. So they have given the specification also, what they want, and they've also given the material. So basically they've given a works contract to these people. Now of course, for all these amounts, for all this work, calorie cafe has to make a payment, and when they are making the payment, here is the government saying, listen, all these are contractors. So while you are making a payment to these contractors, you need to deduct TDS and pay to us, but I know contractors don't have great margins, so TDS will be only at the rate of 2%, and that too if the person whom you are paying to, if the contractor is an individual or a HUF, then TDS will be only at the rate of 1%. So TDS is a very low rate. Yes, TDS is a very low rate here in this case, because they know that these people don't make too much money. Alright, very interesting guys. This is a TDS section called TDS under section 194C. C is for contractor. Whenever you are paying TDS, here TDS rate is at the rate of 2%, and in 1% only if it's individual or HUF, otherwise it will be 2%. But guys, here there is a threshold limit. The threshold limit is more than 30,000 rupees per payment. So if you are making a payment of 25,000 rupees, there will be no TDS. But if you make the 25,000 payment 5 times, there will be TDS, because there are two limits. One is individual limit, so that is per payment, and one is aggregate limit per annum. So if you are making a payment of 25,000 rupees, first payment no TDS, second, third, fourth payment also no TDS, but on the fifth payment, because in a year you paid more than 1 lakh, then on the entire 1,25,000 you will have to deduct TDS at the rate of 2% or at the rate of 1%, as the case may be. So this 30,000 per payment or 1 lakh per annum are the two limits. But besides that guys, there are 3 exceptions. Small personal limit, that is the shortcut for the 3 exceptions. First, this does not apply if the payment is being made by a small individual, small HUF. So in case of calorie cafe, if this was your birthday party and you were a small individual, small HUF, then this does not apply to you. Again, no TDS in case of personal purposes. So if you are making a payment in these cases for personal purposes, again no TDS in personal cases, and no TDS if it's up to 30,000 per payment or up to 1 lakh per annum. So small personal limit is the shortcut to remember the 3 exceptions: small individual, small HUFs, personal payments, and limit of 30,000 or 1 lakh. This is small personal limit. A couple of more things. This is detailed, so watch out carefully guys. A couple of more things. Next exception: if you are making a payment to a goods transport agency who is small, that means who holds up to 10 goods carriages, and who has given you the PAN details, then both these cases have to be there. That means a goods carriage or a goods transport agency has to be small, up to 10 goods carriages in the year, nothing more than that they should own, and they should have given you the PAN details, and in that case there will be no TDS in this case. So this is also an exception. So no TDS in case of small personal limit, no TDS in case of GTA. Also, if this is works contract, then it's a contract. Example, what is works contract? When you've given specifications plus material. But if it is a purchase, so you should know what is purchase and what is works contract. Purchase means you've just gone and purchased the diaries. One of them is not there, specifications or materials. When both of them are there, then in that case TDS will be there, but in case of purchase there will be no TDS. That's the some exceptions. And again, this is on payment or credit basis, whichever is earlier. Again, if no PAN has to be given, and if no PAN, then TDS at the rate of 20%. Those things are still remaining constant. Perfect. Let's try and see. This is 194C. Just repeating, guys, TDS is at the rate of 2% or 1% for individual HUF. 30,000 small personal limit, small individual, small HUF does not apply. Personal purposes does not apply, and limits of 30 and 1 lakh does not apply. GTA and works contract in these cases does not apply. Let's try and read it. 194C. Here we go. 194C is a contractor. Everyone except small individual, small HUF, payment for personal purposes and payment up to certain limits. So small personal limit does not apply. TDS at the rate of 2% on payments made to contractors. 1% in case of contractors, individual or HUF. So it depends upon the person receiving. Yes. No TDS to transport a contractor up to 10 goods carriages and having PAN, or single amount up to 30,000 or aggregate payment up to 1 lakh per annum. Last is here, TDS on payment or credit, whichever is earlier. If no PAN, then TDS at 20%. If it's a works contract, that means you've given specification as well as material, then it's a contract, there will be TDS. But if it's one of them is missing, there will be no contract. Also, guys, advertising, broadcasting, catering, transport, these are typical examples of contract. Also very, very important, guys. If you are a plane company, let's say you are Go Air or Indigo or Vistara Airways, and if you are landing your plane and parking it, just one second. Sorry guys, I'm back. Yes. So if you're a plane company, let's say you're an airline company, and you land and you park your planes at the airport, then that is also under 194C. That is also a contractor. So contractors are most people you have a contract with. So landing and parking is become spelling mistake, but no problem, guys. Landing and parking at the airport are also 194C. Perfect. Guys, we've done some really, really good sections. In fact, I'm in the mood to do 1-2 more, and then we'll take a break. So just doing 1-2 more. 194C we've just done. I want to do 194J. I'll tell you a little about that before we move ahead. So this is very important. When we do questions, you will see from this a lot of questions are asked in the exam. Alright. Guys, here is Calorie Cafe. And as you know, the moment you become a big business, you need the help of professionals. You will need a CA to do your accounts, tax, etc. audit. You will need an engineer to handle your website, etc. So you need professionals' help, and Calorie Cafe was also taking some professionals' help. So here are the people Calorie Cafe was engaging. They had engaged some professionals, example CAs, lawyers, etc. They are also taken some technical people's help, technical services. They were also paying some people non-compete fee. Non-compete is basically for not doing something. Example, whenever a good chef would quit, they would pay him money so that he does not start something on his own and increase the competition. So non-compete. Next, they were also paying royalty on some patents, etc. which they were using, and they were paying, because it is now Calorie Cafe Private Limited, they had directors and they were paying directors fees. Guys, the shortcut is PTNRD. So remember, professionals are PTNRD. P is professional, T is technical services, N is non-compete, R is royalty, and D is directors fees. So they were paying basically money to PTNRD. They had engaged PTNRD. And Calorie Cafe realized that these all professionals were very jealous of each other. He saw that we were all jealous. Why am I saying that? Because the section is section 194J, that is professional fee. So he saw that they were all jealous of each other. Anyway, so he was making payments to them, and whenever he was making payments to these guys, the government would come in and they said that, listen, while you're making payments to these guys, why don't you also deduct TDS and you pay to us? So they started deducting TDS at the rate of 10%. 10% is a lot, yes, because professionals have good margins in their businesses. So hence TDS is at the rate of 10%. But certain item like technical services plus call center services plus movie royalty, on this they reduce the rate at the rate of 2%. I'll repeat, technical services, call center services and movie royalty, they reduced it to at the rate of 2%. Otherwise TDS was 10%. Again, this is on payment or credit basis, whichever is earlier. And very important guys, the exception small personal limit is also in this case, small personal limit. So I'll tell you what is this small personal limit. If you are not Calorie Cafe but you're a small individual, small HUF paying these PT and RD people, then in that case there will be no GST. If you are making a payment for personal purposes, again no GST. And if it is up to a certain limit of 30,000 per payment, again there will be no GST. This limit does not apply to directors fees. So directors fees, even if you are paying less than 30,000, there will be GST. There will be TDS. Alright, just repeating guys, what is this? These are all professionals. How do you define professionals? PT and RD. Whenever you are making a payment to them, do you need to deduct TDS? Yes, but you saw they're all jealous. So 194J at the rate of 10%, 2% for technical services, call center and movie royalty. Payment or credit, whichever is earlier, and small personal limit applies here as well. Let's have a look guys. Towards 194J, is it here? No. Yes. Jealous professionals, PT NRD, small personal limit. Any person except small personal limit, no TDS if payment is made by small individual, payment for personal purposes or payment within limits. TDS at the rate of 10% or payments made to professionals. No TDS if amount paid is up to 30,000 per annum. TDS under 194J would be attracted in case of computer software, except so on computer software also guys, whenever you are paying, because that is also royalty, unless guys the software is ready made and not made just for you, but it's ready made like a Microsoft, Intel. Guys, when you install a software on a computer, do you deduct TDS and all? No, unless guys it is made for you. The limit of 30,000 does not apply to payments made to directors remuneration. TDS will be 2% in case of technical services, call center services and movie royalty. TDS on payment or credit, whichever is earlier. If no PAN, then TDS at the rate of 20%. Perfect. So guys, this is 194J. We've completed a lot of them guys already. So let's see how many we've completed. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 and 11 and 12. So we've almost reached the halfway mark there. The more difficult ones are done. What we will do now is we'll take a 10-minute breather or 5-7 minute breather. We'll come back and we will continue on TDS. Very important chapter, will get you 6 to 8 marks in the exam. If you have any questions, reach out to me in the chat box please. Thank you. Perfect. Guys, we are halfway through TDS chapter. I want to take it slow because we have good amount of time and this is a very important chapter. So hence I'm taking it slightly slower. Here we go. We've just finished 194J and now I'm going to show you a section which is very, very important guys. Guys, there were 3 sections which are not applicable to small individual and small HUFs. 194J, in which case small individuals could pay to professionals without deducting any TDS. 194H, under which small individuals, small HUFs could pay to brokers and not deduct any TDS. And 194C, in which they could pay to contractors and not deduct TDS. So they were very happy, these small individuals and small HUFs were very happy that they could pay huge amounts without deducting TDS. So they started misusing it. So hence the government says that how can they justify this case, or how can you justify his case? This justify his case is a shortcut for J, H and C. So since we could not justify this case, they said that if small individuals, small HUFs, who were very happy, if they are making payments to professionals, to brokers and to contractors, then 194J, H and C might not apply, but because they were misusing it, the government says we want TDS at the rate of 5% if the amount paid is more than 50 lakhs per annum. So this was justify his case, and this TDS section is section 194M, M for misuse. A lot of small individuals, small HUFs were misusing this exemption of justify his case, and hence they said that there will be TDS, but only if the amount is more than 50 lakh rupees on the entire amount. Yes, always on the entire amount, guys. So this was 194M. This is on payment or credit basis, whichever is earlier, and of course if no PAN, then TDS at the rate of 20%. Is very important. So in the exam, if you see a small individual, small HUF, first see if the payment is in the nature of justify his case, and if that is the case and if he is paying, so 194M is only for small individual, small HUF. Yes, only for small individual, small HUF. So I'm just going to read this 194M from here. Should be here 194M. Misuse, justify his case, only applies to small individual, small HUFs when they are paying more than 50 lakh rupees per annum to a person. TDS at the rate of 5% has to be deducted. TDS on payment or credit basis, whichever is earlier. If no PAN, then TDS at the rate of 20%. And here also, guys, because it applies only to small individual, small HUF, you get 30 days to pay. You can pay by the end of the month, 30 days from the end of the month. That is 194M. M is misuse. While we're talking about small individuals, small HUFs, there is one more section which applies only to them. I'm writing the section here only. This section only applies to small individuals, small HUF. Watch out, guys. Again, this is small individuals, small HUFs. Whenever they were paying rent under 194IA immobile property, under 194I, initially you rent, they did not have to deduct TDS, but they were paying huge rents. So the government says, listen, if you are paying such huge rents, I also want to take TDS. So here, small individual, small HUF, when they are paying rents towards immobile property, and if the rent is more than 50,000 per month, then there will be TDS. They will have to deduct and pay to the government at the rate of 10%. As this is called section 194IB, because even small individual, small HUF found it impossible to buy, and hence they would rent out. This is called impossible to buy, and hence they would rent out. 194IB says TDS at the rate of 10% if the rent is more than 50k. So guys, there are two sections which are only applicable to small individual, small HUFs. One is 194M, misuse, for justify his case, and 194IB, which is impossible to buy. I'm just reading out that one as well. 194IB is here. Impossible to buy only applies to small individual, small HUF. TDS at the rate of 5% if the rent paid on residential house property is more than 50,000 per month. TDS cannot be, this has to be paid within 30 days. I'll explain what is this. And TDS on payment of credit, whichever is earlier. If no PAN, then 20%. This and this are connected. I'll explain what this is. Alright. So let's say you are working as a CA, you have a very good salary, and you've taken a house on rent more than 50,000 per month you are paying as rent. Now in that case, you will be subject to TDS. You have to deduct TDS and pay to the government. But because you are a very busy person, you don't need to do this every month. So hence, you can do it on the last day of the year. So example, March is just ending. After March, you can deduct it. Or if you're vacating, let's say in December, so in December you can do it. So can you do it at one time? Yes, you can do it once in a year, whichever is earlier, whenever you're vacating, or March, whichever is earlier. And it's a one-time thing, and you need to deduct it and pay it by the 30th of the next month. So this is an exception where you don't need to deduct every month. And in the last month when you're deducting, if the amount that you need to deduct is more than the amount that you have to pay, then don't worry, whatever you have to pay, you can deduct that much. So example, if for some reason you need to deduct 40,000 rupees as TDS, but what you're paying is only 38, then you can deduct the entire 38, no problem with that. So this is 194IB, impossible to buy. This was 194M, this is 194IB. These are two very, very important sections that are done and dusted. Now guys, going to some miscellaneous sections. If you remember, there is, just one second. Perfect. Guys, if you remember, there is a land that I can see. This is a land that I can see. But a construction company can see 5 additional floors. Guys, in capital gains, there was a section called 45, and in that there was a section called 45(5)(a). Let me recap that section for you. So this is the land that I own, and this is me, and I own this land, and I give this land to a construction company to build 5 additional floors. What is the benefit for them? We will share. I'll get 5 additional floors, they'll get the balance, and this is subject to capital gain because it is ATSCP. Is it an asset that I have given up? Yes. Is this a transfer? Yes, it is an exchange. I have given up land, I'm going to get some money plus 5 additional floors. What is the sale consideration? The money that I've got plus the stamp duty value of the 5 additional floors. What is the cost? Whatever is the cost of my land. What is the period of holding? From the date I bought that land till the date I've signed this joint development agreement. Guys, this is section 45(5)(a), and they say that this capital gain will be taxed not in the year you give the land, but in the year when the building is ready. So this was in capital gain. Now same thing, but from a TDS perspective, we have to see. Here is the TDS perspective, guys. Watch out for the TDS perspective. They say that this construction company, for this transaction, they are going to pay you some money, not the land, not the 5 additional floors, but they are going to pay you some money for this transaction. This is you, and the government says, listen, this is income, this is that person's capital gain. So while you are paying him that money, not the additional space, but the money, you need to deduct TDS at the rate of 10% and pay to me. And while you see only a piece of land, what do they see? They see 5 additional floors. So hence the section is 194IC. I see 5 additional floors. Here the TDS is at the rate of 10% on that amount that is paid to you. Whenever that amount is paid or credited, TDS is at the rate of 10%. This is a very small section called 194IC. So I'm just going to tick mark and read that also for you. Here we go. 194IB was done, 194IC. Any person making a payment to a resident, TDS at the rate of 10% on amount paid under a joint development agreement. Refer section 45(5)(a) of the capital gains chapter. TDS on payment of credit, whichever is earlier. If no ban, then TDS at the rate of 20%. This, guys, is section 194IC. Alright. Moving now to another very, very interesting, slightly different section. This is 194IC, done and dusted. Now, going to a very interesting section. Guys, you've taken life insurance. The reason you take life insurance is because you are scared of death. You feel that if you are no more, who will take care of your family, and hence you take life insurance. You know that if any amount is received on death, it is completely exempt. There was a section called 1010D in a chapter called exemptions. Section 1010D is on the death of a person. If you get some money, it is exempt. Also, if the premiums are low, how low should the premiums be? If the policy is taken before 1st of April 2012, then the premium should be maximum 20%. If the policy is taken on or after 1st April 2012, then the premium should be maximum 10% of the sum assured. And if the premiums are low, same thing for disabled also, but they get from 20 to 15%. So if the premiums are low, again it is exempt under 1010D whenever you get the amount back. So guys, in 2 cases it is exempt: when you receive on death of a person and when the premiums are low. And when there is exemption, there is no TDS. Just like when you go for a wedding and you eat food, there is no bill at the end. But in one case, when the premiums are high, it becomes taxable. And because there is tax, there will be TDS, and TDS will be under a section called 194DA because it is the death amount. That is the shortcut. DA is death amount. Of course, on death is exempt, but life insurance is nothing but death amount. So hence you have to remember the section 194DA, death amount. In this, there is a particular step. First, TDS will apply only if the amount received is more than 1 lakh rupees. So if the amount received is 90,000, then even if it's taxable, there will be no TDS. So TDS is first step only if the amount is more than 1 lakh rupees. That is the first step. And second step is you need to calculate the net amount. What is the net amount? The amount that you received less the premiums that you've paid. Because see, as you know guys, TDS is only on the income. If I have got 10 lakh rupees but I have paid 7 lakhs as premium, my income is only 3 lakh rupees. So you have to calculate the net amount. On that there will be TDS at the rate of 10%. So just recapping guys, this is death amount. If the amounts are exempt, there will be no TDS, but if the amounts are taxable, there will be TDS. If the amount, step 1 should be more than 1 lakh rupees, and step 2 on the net amount, there will be TDS at the rate of 10%. Rest of the things remain the same. Who will deduct this money? Whoever is paying you insurance, that is the insurance company. Yes. So just reading 194DA. 194DA, here we go. 194DA, death amount. Any person making a payment to a resident person, TDS at the rate of 5% on the net receipts, that is the amount received from the insurance company less insurance premiums. And the first step is only if the amount is more than 1 lakh. Receipts from life insurance is taxable only if the premiums are higher than this limits discussed under 1010T. We're discussing everything in detail guys. Watch out, get your marks, do well, move ahead. Perfect. Now, guys, I told you I had bought national savings certificates when I was working with PwC or EY, I don't remember, but I had bought national savings certificates. I had gone to the post office and I had bought some NSC because you know that there is a deduction under section 80C. So if you buy NSC certificates worth 1 lakh, you can minus 1 lakh from section 80C. So I had done that. On NSC, you get some interest which gets accumulated, and at the end of few years, you can withdraw the money. So I went to withdraw the money and it was very exhausting guys, because I had to go like a couple of times and it was extremely exhausting. Now this is the person who's paying me the NSC money, National Savings Certificate amount, and the government says, listen, this is either the post office or some person who has done this NSC for me. When they are paying this amount and if the amount is more than 2,500, TDS has to be deducted at the rate of 10%. That is extremely exhausting. 194EE. And with this guys, we have come to incomes now. Now these are all incomes guys. National Savings Certificate giving me money is an income. So we are coming now to incomes. All the income section, the rate is exactly the same, that is 10%. I'll show you first what is EE here. This we finished, 194DA. Now 194E, extremely exhausting. TDS at 10% of the amount of NPS is more than 2,500 per person per annum. This is only on payment basis because generally as this amount is paid by the government and hence is only on payment basis, and no TDS is paid to the heir of the assessee. That means if the person is no more, then there will be no TDS in that case. Alright. Okay. Now guys, if you see, all the remaining ones mostly are all incomes. I'll take you through the sections, but this is interest on securities, 193, 194A, interest on bank and other interests. Then all this page is done, this page is done. Here it's 194K mutual funds, 194O and N. First we'll discuss O and N, and then only we'll go to all the different incomes. So these two are left. And 194 dividend, 194P is latest one. So let's do the remaining ones and then we'll go to the balance incomes. All right. This next one here is 194N, section 194N. Let me tell you the shortcut and let me explain this section for you as well. Guys, as you know, a calorie cafe would require a lot of change. They will require notes. This is a story. So they will require notes every day because customers can pay you 2000 rupees and you need to give change. So calorie cafe would go to a bank and would withdraw money every day. It's your money only, you're withdrawing, no problem. But the government wants to know who are these people who are making such huge withdrawals. So the government has told the banks that, listen bank, if the person withdraws more than 1 crore rupees, and there's a very big exception here, if the amount is withdrawn is more than 1 crore, then TDS has to be deducted at the rate of 2%, but only on the excess amount. And still now TDS is always on the full amount. If the threshold was crossed, let's say you are getting a KBC money more than 10,000, and on the entire amount always TDS is to be deducted. Only in this case on the excess you need to deduct. So if you are withdrawing more than 1 crore, up to 1 crore no problem, but more than 1 crore, let's say you withdrew 1 crore 10 lakhs, then on the 10 lakh rupees they will deduct at the rate of 2% and they will pay to the government. This is basically 194N. The shortcut is N for notes. However, this section does not apply to a few people. It does not apply to the government because government can withdraw any amount of cash. It does not apply to banks because banks also need cash for their ATMs, etc. It does not apply to banks, government, and it does not apply to white label ATMs. What are white label ATMs, guys? As a company, you can start an ATM. Reliance, Tatas can start an ATM. Those are called white label ATMs run by private companies or non-banking companies. Even those people can withdraw money. So does not apply to 3 people, does not apply to the government as always, does not apply to banks, and does not apply to white label ATMs. Anyways, coming back, this used to be the case till the government got stricter on cash transactions. They said that if in the last 2 years, before this period, if in the last 2 years you have not filed your return and you are still withdrawing so much money, then the limits are changing. Above 20 lakhs if you withdraw, then 2%, and if you withdraw above 1 crore rupees, then at the rate of 5% is what we will deduct as TDS. So the amounts were increased, yes, the amounts were reduced, but the TDS rates were increased. This is a punishment if you have not filed your return. Let me show you 194N, important because it's latest, guys. 194N, banks, cooperative banks or post offices, TDS at the rate of 2% in case cash withdrawals of more than 1 crore per bank per annum. Guys, why per bank? Because one bank will not know how much other bank has withdrawn. So hence per bank per annum. From 1st July, if ROI is not filed for all, I said my mistake 2 previous years, but if ROI is not filed for all the 3 previous years, all of them, then the rate becomes 2% above 20 lakhs and 5% above 1 crore. Guys, that's a lot of money. Imagine withdrawing from your ATM and 5% less you get, you would feel very frustrated. This is that frustration. Exceptions: no TDS if withdrawal is made by the government or banks, post offices, white label ATMs. TDS only on the excess amount, guys. Above the threshold limit, TDS only on payment basis. So guys, there are some payment basis, like this is payment basis, bets and bigger bets is payment basis. Any payment made by the government, like legally acquire, all those are payment basis. Very logical to understand what is payment basis. And now 194O, let's understand what is 194O. Guys, TDS is the most important part. Once we finish TDS, you'll see that TCS and advanced tax are really simple. So TDS is where all the importance is. Okay. Guys, 194.0 in COVID, you've seen everyone start selling online. So let's say you also have started selling online and you sell food on Zomato. You make the food at home and you sell it on Zomato. And there are people who buy your food from Zomato. Let's say someone has placed an order and this week you've sold food on Zomato worth 20,000 rupees. Now Zomato will collect this money from all the customers and they will pay you this money, and while they're paying you, the government says, listen, these are online transactions, so we also want to be a part of it. So why don't you deduct TDS at the rate of 1%, very low, and you pay it to us on these payment made for online sales. So whether you're Uber, Ola, Zomato, anyone who you're making payment, you need to deduct TDS at the rate of 1%. But guys, imagine Olas and Uber drivers. They are very hard-working people, individuals, and 1% is something that it will bother them. So hence the government says this is first of all section 194.0. O is online. And in 194.0, O that is online, they are saying that TDS will be at the rate of 1%. But for individuals and HUF, that means if you're an individual or an HUF and you're selling, then up to 5 lakh rupees, there will be no TDS. That means if you're, let's say, an Uber driver, Ola driver, and you're making 5 lakh rupees from one platform like Uber, then in that case there will be no TDS up to 5 lakhs. Just reading it from the quick book. Here we go, guys. E-commerce operators, when they are making payments to e-commerce participants, TDS at the rate of 1% of the gross amount sales on e-commerce operator. Exception: no TDS if the seller is an individual HUF and the gross amount during the year does not exceed 5 lakh. TDS on payment of credit basis, yes guys, here is an exception. If you don't give your PAN number, then from 1% they do not want to straight charge 20% because that will be a 20% jump, and this is a new section, and hence they said that if you don't give your PAN, the TDS rate will be only 5%. So that's an exception, yes. That is an exception, yes. So if no PAN, then TDS at the rate of 5%. How do you remember this? See, 194.0 is new and they didn't want to punish 20 times more, and hence they said TDS will be only at the rate of 5% in case no PAN is given. Alright. Now guys, we come to the income sections, a few income sections, and then it's done. TDS chapter is done. Here we go. Guys, what if you are earning interest on securities? Let's say this is a company. This is a company whose debentures you have, not shares guys. If you have debentures or if you have securities, then this is you and you have bought some securities or debentures of this company, and when the company is paying you interest, then the government says even we want TDS at the rate of 10% if the interest amount is more than 5,000. So obviously you're earning interest, that is taxable. So hence the government says we also want TDS on it, that is at the rate of 10%. This rate is standard guys for all incomes. If you saw extremely exhausting 194EE, it's also the same. And this one is a unique section guys. This section is only section in 193. So 193 spoke about interest on securities. TDS at the rate of 10% if the amount is more than 5,000 rupees. Alright. Okay. Now guys, certain exceptions. What if instead of you it was LIC and GIC? So I'm just writing the exceptions here. Instead of you it was LIC, that is Life Insurance Corporation, or GIC, that is General Insurance Corporation. They have a lot of money which is parked in securities. So when they make money, in that case there will be no TDS. In this case there will be no TDS. So that's one exception. Also, if it's government security, then only if the nominal value of government security is more than 10,000, only then there will be TDS. So let's have a look at 193. It's a pretty simple section. 193, here we go. Any person who is holding securities is paid interest 10%. In case of government bonds, TDS only if the nominal value of government bond exceeds 10,000. No TDS if interest on debentures is paid by check, only up to 5,000. So up to 5,000 there is no TDS. And no TDS in case of 8% saving some taxable bonds of the government. They wanted people to buy it, and then they said there will be no TDS on that. Alright guys, this is section 193. Simple, not very important. Also what I'm going to show you next is absolutely important. Again guys, in the income sections we've done 194 EE, extremely exhausting, and we've also done section 193 right now. Let's do the next one, Axis Bank. Guys, this is Axis Bank. That's just an example because the section is 194A. And you have some saving account, FD, etc. with Axis Bank, and they pay you interest. Again, the government says, listen, if you're getting interest, then I want TDS at the rate of 10%. So this is also interest. 193 is also interest. How do you differentiate? 193 is interest from securities. This is any other interest, whether a bank pays you, whether a friend pays you, whether a partnership firm pays you, whoever you've given money to and they pay you interest, this is TDS on that at the rate of 10%, and this is you. So the section is 194A, TDS on interest. Again, the TDS rate is similar guys, TDS at the rate of 10% if amount is more than 5,000. If amount is more than 5,000, yes. Next, very important guys, for banks they have a limit up to 40,000 rupees if you are not a senior citizen, and up to 50,000 rupees per annum if you are a senior citizen. Interest will not be taxed. So general limit is 5,000, but for banks there is a limit of 40 and 50,000, and this is the cumulative limit based on CBS, computerized business software. Basically that means if you have an account with Axis Bank Mumbai and Axis Bank Delhi and Axis Bank Pune and Axis Bank Jaipur, 4 branches of Axis Bank, then all the 4 branches will talk to each other and we'll figure if the amount of interest that you earn is more than 50,000 or 40,000 or 50,000, there will be TDS at the rate of 10%. Guys, here when a partnership firm, these are the exceptions, when a partnership firm pays TDS, there is no TDS when it pays to resident partners. But when it pays to non-resident partners interest, TDS will be there only to resident partners. Another exception guys, motor claim accident tribunal. Example, you had some motor accident and you made a claim, and the tribunal has given you some compensation late and they paid you interest. On that interest up to 50,000 rupees, no TDS. Motor accident claims tribunal, in that case up to 50,000 if they are making a payment, there will be no TDS. And this does not apply to small individuals, small HUF. So if you've given money to your friend, let's say he's your college friend and you've given money to your college friend and he's paying you interest, in that case there will be no TDS because he's a small individual, small HUFs. So imagine you giving money to 3 people, Axis Bank, your college friend and your partnership firm. Axis Bank 50,000, 40,000 is the limit. Your friend, small individual, small HUF, there is no TDS. And partnership firm, resident partners, no TDS. In non-resident partners there will be TDS. This is 194A. Here we go. Interest other than interest on securities, everyone except small individuals HUFs, rate is 10%. Interest up to 5,000 per annum. In case of banks is 40 or 50,000 subject to CBS. Interest paid to resident partners, no TDS. Payment under motor accident claims tribunal up to 50,000 per payment. And interest when you pay to the banks, etc. Yes, that is very interesting, guys. When you, whoever you are, if you are paying to the bank interest, have you ever heard that I have paid an EMI and I have deducted TDS? No. Payment or credit, whichever is earlier. If no PAN, then 20%. Limit should be seen based on CBS if aggregate for all the branches of a single bank. That is 194A. Very important, guys. So 194A, again all these are 10% amounts. Now we are going to 194, something which was introduced or actually reintroduced very recently. Guys, these are companies, and now we are not holding debentures in the company, we are holding shares in the company. This is you, and you are holding shares in a company. When you hold shares in a company, obviously you can sell the share and you can make capital gain. There is no TDS on capital gains. But if you have dividend from the company, is that your income? Yes. So the government says, listen, if you are paying dividend, we also want TDS at the rate of 10%. How do you remember the rate, guys? All incomes is 10%. And the dividend, only if it's more than 5,000 rupees, there will be TDS at the rate of 10%. Guys, this is section 194, plain and simple 194. TDS at what rate? At the rate of 10% if the amount is more than 5,000. But guys, if the TDS is paid in cash, now generally it's not paid in cash, but if it's paid in cash, then limit is not there. This 5,000 limit is not there. This was an exam question, so watch out, guys. This limit is not there when the TDS is paid in terms of cash. So here we go. Section 194, Indian company to a shareholder, TDS at 10% in case dividend is paid more than 5,000. This threshold will not apply if dividend is paid in cash. TDS before making such payment. No TDS on dividend paid to LIC GIC. Same like interest. Even TDS paid to dividend paid to LIC GIC, there will be no TDS. And now, guys, one of the last ones. So 194 and now 194K, Kotak mutual funds. You did not know how to buy shares, you didn't know how to choose shares, so instead of that you went to Kotak mutual funds and you said, Kotak mutual fund, why don't I buy your units? I don't know how to invest in the share market, so I'll buy your units and you can give me income. Income basically means dividend. When given by mutual funds, it's called income. They will get it from the companies and they will pay you this income. The government told mutual funds that, listen, if you are paying this income and if you are paying more than 5,000 rupees, then again TDS at the rate of 10%. This is Kotak mutual fund. Very, very similar to something that we have already done in terms of dividend. This is Kotak mutual fund 194K. Any person to a resident person, TDS at 10% on income of units of mutual fund if the amount is more than 5,000 per annum. No TDS on capital gains, TDS on payment of credit, whichever is earlier. If no PAN, then TDS at the rate of 20%. Guys, some standard things. Payment of credit, whichever is earlier, is mostly standard. If no PAN, then TDS at the rate of 20% is mostly standard, except few situations, guys, like 194O, where it becomes only 5%, where 192 and 192A, where it becomes MMR. So except a few situations, it's always going to be at the rate of 20%. And with that, guys, more or less we've completed TDS part, which is the 90% of the bigger part. The income tax payable by an assessee is paid, deducted, collected either through TDS or TCS or advance tax, or finally through self-assessment tax. Thus your total tax liability is nothing but TDS, TCS, advance tax and self-assessment tax. TDS is deducted, TCS is collected and advance tax is paid during the previous year. Self-assessment tax is paid during the assessment year while filing the return of income. Provision linked to TDS are is under. So these were all the different provisions. The highest rate we've seen is 30% for bets and bigger bets, and the lowest rate we've seen is 1% for 194O, 194I, immovable property acquired, etc. It's only 1%. And most common rate is 10%. As you can see, every year there is a question on TDS, every year without fail, guys. There is 194Q, but we will see this Q when we see TCS because it's related to TCS section. So we will see that and we link it to Q. Under the provisions of 196, very important, guys, section 196, because we've done 192, 193 and 194. What is this 196? If you are making some payment to the government, then why do you need to deduct TDS and pay to the government only? So no tax is required to be deducted when any sum is payable to the government, that is 196. So if you've taken a building on rent from the government and you're paying rent, and on that there will be no TDS. Unless stated otherwise, time of payment will be payment of credit, whichever is earlier. On payment basis, 192, 192A, 192, 194LA legally required because the government is paying bets, bigger bets, and 194N. No TDS on GST. During the year 2021, guys, not your year, before your year, there was a COVID year. In that case, they had given a discount on the TDS rates, but this is not applicable to yours. So just telling you, by the way, if someone confuses you, or if you read somewhere about this 25% discount, so all the 10% rates had become 7.5%. All the rates are flat rates, that is no surcharge and cess is paid to residents. Guys, when you deduct TDS, you will deduct the entire amount, no surcharge, no cess. Unless stated, if no PAN, then TDS rate will be 20%. Small individuals and HUFs mean those who do not cross the turnover of 1 crore 50 lakh in the preceding financial year. And tax on sweat equity shares. This is important and slightly different. Let me first explain what is tax on sweat equity shares. Guys, this is Unacademy, and they have offered you some sweat equity shares. This is you, and they have given you some ESOPs, also popularly called as sweat equity shares. Now you know, guys, this is a perquisite. We have discussed under section 17 that this perquisite is to be valued. So let's say the share price right now, the fair market value is 555 rupees and the exercise price is only 55. So you are getting a perquisite or a benefit of 500 rupees into the number of shares which will be taxable in your hands. But it's funny because they haven't paid you any money. They have only given you these ESOPs, which is difficult to sell also right now because it's unlisted company. So how do you pay the tax on this? Earlier you had to pay the tax and Unacademy had to deduct the TDS, but now thankfully that has not been the case. They say that on this the tax can be paid either once you leave the company or within 4 years, that is 48 months of exercising the option, or when you sell, whichever is the earliest. So whenever you leave the company or within 48 months of you obtaining these shares or with sale price, whichever is earlier. Tax on sweat equity shares in case of eligible startups to be paid directly by the employee within specified period, already discussed in the salary chapter. So this has links with salary when you leave or 48 months or when you sell, whichever is earliest. The above TDS should be deposited with the central government by the 7th of the next month. For the month of March, that is this month, you have to pay by 30th April because, guys, the last month of the year, so all the calculations have to be done and then you pay by 30th April. For the quarterly statement has to be filed by 31st. This, guys, you don't need to know, but for all the months, that is April, May, June, by July 31st, you have to file a return with the officer, with the government, saying that these all TDS have deducted. But this one is important, guys. What if you don't pay by the 7th or the 30th of the month? Then in that case, if you've deducted and you're paying late, that means you're using the government's money. Interest will be at the rate of 1.5% per month, which is literally means 18% per year. And if you've not deducted only, then it will be at the rate of 1% till you actually deduct it. Guys, this is a recent change. We'll talk about this. Section 196 we've done, no TDS in case the payments are made to the government or the Reserve Bank. TDS certificate not really that important, but whenever someone deducts TDS, you get a certificate online. Perfect. Now let's see 206AB. Guys, generally TDS return rate is at the rate of 1%, 2%, 5%, 10%, 30%. But they say that if you have not filed your return, if a person who has not filed the return of income for both of the 2 assessment years relevant to the 2 previous years, and the TDS TCS is greater than 50,000 in each of the 2 previous years. Example, last year and last to last year you have not filed your return, but your TDS is more than 50,000. That means you have so much income, guys, where your TDS is more than 50,000. Then in that case, they are going to punish you because you're not filing return of income. They say that this year the rate applied will be twice the rate which is mentioned in the act, or this is actually for TCS, but we'll discuss it now only. This is a punishment rate. in case you have not filed your returns for the last 2 years and your TDS TCS is more than 50,000. So it will be twice the rate in force or twice the rate as per the Income Tax Act, or 5%, but this is for TCS. 5% is not there, but anyways, whichever is the highest. Why highest? Because they want to punish you, because even though your TDS TCS was high, you were not filing your return of income. Guys, when is the TDS high? Your TDS, even if you consider at 10%, will be 50,000 only if your income is 5 lakhs or more, and hence why did you not file your return of income? So that is the concept of this punishment, 206AB. But right now please remember 206AA, or even more important is AA, because always anonymous. Perfect. Guys, this is the end of TDS. Now there are two things remaining, that is TCS and advanced tax. We will take a 5-minute away. We'll come back and we will finish TCS advanced tax both in this session only. And guys, once we finish, we will do back-to-back questions so that you are well versed. All the module questions we will do. And when we do tomorrow or day after tomorrow, whenever we meet next, the exam questions, you will see how every year there is one question on TDS, TCS or advanced tax. Mainly TDS, sometimes TCS as well. Till now, advanced tax, they have not asked a question yet. 5 minutes and we'll be back. Thank you. Alright, getting back. Guys, just one section I forgot to discuss, which I want to discuss right away in TDS. So just discussing 194P, which is actually a latest section. So it's good that we're discussing it separately. Now P is basically pension. Okay, so remember it from the name of pension. This is a bank and you are a notified senior citizen. Notified senior citizen means you are more than 75 years old. Now typically guys, when you are so old, what happens is you get your pension from the bank and you get interest from the bank, and the bank deducts a lot of tax, and because of that you will have to file a return and get a refund, because whenever the bank pays you interest more than 50,000 rupees, they'll deduct at the rate of 10%. And on the pension also taxable guys, monthly pension, so there will be tax, but you are in a very high limit or high bracket. So hence the government has told these kind of banks that banks, whenever you're making a payment to these notified senior citizens, payment of what? Payment of pension plus payment of interest, then you need to deduct only and only as per the rates applicable to them. No flat rates, no. TDS will be there guys, but there will be no particular rate. That means for each person, just like how you would do in salaries for each employee, same here for each senior citizen, you will add up his pension income. Let's say his pension income is 30,000 rupees a month, so 3,60,000, and let's say his interest is 2 lakh rupees, so totally is 5,60,000, and let's say he is doing some investments of 60,000 rupees, so his income is 5 lakh rupees total income, and because it is subject to rebate, he will not be there will be no TDS, there will be no tax he'll pay, so you don't have to deduct any TDS. So what they are saying, that instead of blindly deducting, now otherwise guys, if 194P was not there, let's see what would have happened. On this 2 lakh rupees, they would have deducted 10%, that is 20,000 rupees, and for that refund, the older citizen would have to file his return. I'm explaining this with logic so that you understand the logic as well. The idea is not to go into a level where they have to file the return and get a refund, and hence 194P is great, but this can only be done if you maintain your account and your interest only with one bank. Your pension is also coming to the same bank and the interest is also coming from that same bank. Specified senior citizen, TDS to be deducted by the bank at rates in force for senior citizen greater than 75 years having only pension income and interest income both earned in the same bank. This avoids the burden to file return of income at the end of the year for such senior citizen. They don't even have to file their return of income, and even if the TDS has been deducted, it's not deducted extra, so they don't have to file and take a refund. Alright, now guys, with that we are entering into the world of TCS. Let me explain what is TCS guys. Guys, in case of TCS, let's say this is Mercedes And let's say you're buying a fancy car, you're buying a Mercedes car worth, let's say, 50 lakh rupees, and this is you. Now obviously Mercedes is going to collect money from you. Let's say they are going to collect 50 lakh rupees from you for the car, and this is the government. Government is wondering, who is this person who is buying such a nice fancy car, and has he paid the tax, etc. They want to keep a watch on you. So they tell Mercedes that, hey Mercedes, whenever you are getting this 50 lakh rupees, why don't you do one thing? Why don't you collect a little more and you pay that little more to us, and we'll call it tax collected at source, which is at the rate of, let's say, 1%. And you also give us his PAN number. What if he does not give the PAN number? Then there is punishment, just like there was 206 AA. Here also it will be double the rate or 5%, whichever is higher. You will have to pay to the government that kind. You will have to collect that kind in case that person does not give you the PAN. Now guys, this scenario is called TCS, where tax is collected at source. Again, when you pay your final taxes, you can always take a credit of this 1%. So this 1% is just like TDS, TCS also you can take a credit of. You can take credit very easily. Generally, it is on receipts or debit, whichever is earlier. In TDS, we had payment or credit. Here, you're not paying, you're receiving it. So whenever you receive it or whenever you debit that person's books of accounts in your book of account, whichever is earlier. And if no PAN, again, here also there is a punishment, but the TCS rates are very small, so the punishment is double the rate or 5%, whichever is higher. This is TCS. Guys, generally TCS is not applicable in certain cases whenever the buyer is not you, but if the buyer is a government or if any United Nations office or any embassy, then in that case this does not apply. Now, why was TCS not heard of? Everyone's heard of TDS. Why is TCS not so heard of? Because guys, TCS was only on very few products, very few products. But suddenly now it's become very famous because now the scope has expanded. So let me tell you on which products there was TCS. Shortcut is alcohol scraps my car. That's the shortcut. So on sale of alcohol, on sale of scrap, on sale of minerals, and on sale of car. Alcohol scraps my car. I repeat, on the sale of alcohol, on the sale of scrap, on the sale of minerals, and on the sale of car, there will be TCS at the rate of 1%. Next is you need 2 licenses for 2.5% timber and 5 tendu leaves. What is this, guys? Whenever you are selling a license, not selling the land but selling the license of a parking lot. Let's say you're the government and you are selling a parking lot to a private company for, let's say, 10 lakh rupees a year. Then you will collect 10 lakh and you will collect 2% more. So license of parking lots, tolls, mines, etc. Whenever you are selling timber, let's say you are selling timber worth 10 lakhs to a furniture manufacturers, you will collect 10 lakhs plus you will collect 2.5%. And whenever you are selling tendu leaves, which is used to make beedis, you will collect the money. Along with that, you will collect extra 5%. So this is the rate. Alcohol scraps my car, 2 licenses for 2.5% timber and 5 tendu leaves. As this is the rates. So you don't have to by heart it individually. This sentence will help you by heart all the TCS rates and all the products on which there is TCS. So guys, what if I buy this pen? Will there be TCS? No, because not alcohol scraps my car. What if I buy this laptop which I am using? There is no TCS, and that's the reason TCS would not bother you and me in generally, because it is only on these few products, that is alcohol scraps my car and 2 licenses for 2.5 timber and 5 tendu leaves. But then guys, the government brought in 3 new sections. Check the sections one after the other. You'll understand what I'm talking about. Just a second. The first section was for fancy cars, which you already know. Mercedes was that fancy car. Whenever Mercedes collects money from you, they'll collect 1% extra and pay to the government. and that is a section called 206C. By the way, it's a section for TCS is 206C, C for collect tax. TCS is tax collected, and this one is 206C 1F, one fancy car. What do you mean by one fancy car? If the value of the car is more than 10 lakhs, I call it fancy because of the section, but otherwise they call it a car more than 10 lakh rupees. Then TCS has to be collected at the rate of 1%. There was a COVID discount before this year, but not applicable for your year, so don't worry about it. And this has to be on payment basis, on receipt basis. So whenever you receive this money, that's when you have to pay to the government, not before that, on receipt basis. This does not apply, so exceptions, when the buyer is the government or an embassy or a UN office, etc. And also it does not apply in case of wholesale transactions. So if Hyundai or if Mercedes factory is selling it to a Mercedes showroom, then on that case there will be no TCS. But when a Mercedes showroom sells it to you on the retail level, it will be yes. It also applies on second hand cars. Same concept applies on second hand cars as well. This is 206C 1F, one fancy car. So this is when you and me started feeling about TCS. I felt TCS the first time I bought a car. I realized that there is TCS, because when I bought the car more than 10 lakh rupees, I had to pay 1% TCS. Of course, I could take a credit of that, but that is when you first realize that there is something called TCS. Alright, just 1 second. Alright, now guys, this is when you and me started feeling about TCS. Now let's see, is there anything more on TCS? Watch out guys, the next thing on TCS. Now after this car incident, they started talking about high value transaction. This is affecting everyone, watch out. They say if you're a seller and you're a high value seller, that means your turnover was more than 10 crores turnover in the last year. That means, are you high value seller? Yes. And you are selling goods to one buyer, not export but Indian sale to one buyer, and the sale is more than 50 lakhs in the year. And then on that excess, the government wants to know who are these buyers who are buying so much from you. So the government has TCS will be at the rate of only 0.1%. So it's a very minimum TCS, yes, only at the rate of 0.1%. So remember guys, this is section 206C because it's TCS, and because it's high value, the section is 206C 1H. So 1F was fancy car, this is 1H. 1H is high value, or H is high or high value. What is high value? The seller should be turnover of more than 10 crores in the last year, and he should be selling more than 50 lakhs. And guys, this is unique, just like 194N notes, where only on the excess amount there was TDS. Here also only on the excess amount there will be TCS. So if you're selling worth 55 lakh, then only on 5 lakh 0.1%, that is only 500 rupees has to be collected extra and has to be paid to the government as TCS. Guys, this is the concept of 206C1H. This is TCS at the rate of 0.1% on the excess above 50 lakh rupees, and this is only on goods, but all goods guys. And that's the reason, not just alcohol scraps my car, not just 2 licenses for 2.5 timber and 5 Tendu leaves. This is on all the goods. So if I'm selling these kind of pens or these laptops On everyone now started realizing that there is something called TCS, because these are on all goods. Yes, these are on all the possible goods. Perfect. All right then. So I'm just going to read it out. There's one more, but first we'll read this out and then we'll go ahead. Guys, just reading TCS. Tax collected at source is only to be collected by a seller, that is will be added to the cost of the product. TCS on the following: alcohol scraps my car 1%, 2 licenses for 2.5 timber and 5 tendu leaves. So for alcohol, guys, alcohol it is not at retail level, while car is only for retail level. Alcohol is not at retail level. So if once you become CA and let's say you drink occasionally, I'm not encouraging it, but if you do, then in that case, whenever you go to a wine shop and you buy alcohol, you will not pay TCS because it's not at the retail level. Not in the case of consumers. Sale of scrap, minerals, car, 2% on license for parking lot, toll, plaza, mine, 2.5% on timber, 5% on tendu leaves. No TCS is buyer is government, embassy, etc. High value, then TCS at the rate of 0.1%. If you don't give your PAN, then it will not be 5%, it will be twice the rate or 1%. So it's an exception. 206C1F is fancy car, only at the retail level. So this is opposite of alcohol. Alcohol is not at retail level, car is only at retail level. And last 206C1G, which is one global. This question came in the exam as well. Both this 206C1H also and 1G also. Alright. 1G global, we're talking about 206C1G, that is global. Let's understand what this is. Guys, this is an authorized dealer. Authorized dealer is also the seller. Guys, TCS is always focused on the seller. You are selling something, either alcohol, scrap, mineral, car, either high value, something you are selling, so it always focuses on the seller. Now he's an authorized dealer. That means in authorized dealer, guys, means someone who's authorized to sell foreign exchange. And this is you are buying foreign exchange. This is dealing in forex, and this is the government, and the government is watching this transaction and is wondering, why are you buying forex? So they tell the authorized dealer that whenever you collect money from this person who's buying forex, also collect some TCS and pay to me. That is what is TCS here. But the TCS here, guys, is a whooping 5% if the amount bought of forex bought is more than 7 lakhs. It's a huge percentage, guys. 7%, 5% is a huge percent. So they say under this section, TCS will be at the rate of 5% if amount is more than 7 lakhs. But there are two exceptions, guys, 1 and 2. See, watch out, guys. The first one, if you are going for education abroad and if you've taken a loan from India, again I repeat, guys, not your own money. If you've taken a loan and you're going for education abroad, then the government feels that 5% is too much. So they say in that case TCS will be only 0.5% above 7 lakhs. So one thing remains the same and one thing changes. And if you're going for a holiday, just like that, you want to go to Switzerland, etc., then TCS will be at the rate of 5%. So this is the same, and without any limit, this has changed. That means even if you're going to Turkey or Switzerland or wherever, even Sri Lanka for that matter, and you're buying foreign exchange, then you will have to pay TCS at the rate of 5% extra, because the government wants to know who is this person who wants to buy forex, who is this rich person who wants to buy forex. This is section 206C1G. Guys, this one was asked in the exam very recently. I'll just show you. TCS is forex if forex is bought or forex is transferred. TCS rate is 5% above 7 lakhs. However, it is 0.5% if it's for education abroad from a loan, and it is without any limit, without the set threshold limit of 7 lakhs in case of foreign tours. And if no PAN, then TCS at twice the rate, or 5%, whichever is higher. Perfect, guys. This is TCS, and now we've reached the last point, that is advanced tax. Starting that off in 2 minutes, completing that in this session. The next session when I see you, we will complete all the questions that are there in the module, and we will also, return of income is a very small chapter. We will finish that and then we'll do computation. We are very well set for a lot of time that we'll have to do all the extra questions after that. 2 minutes and we start advanced tax. Alright, let's do advanced tax, guys. Advanced tax is the last in the series and this chapter, and once we are done with this, we will open up to module questions and we'll do as many as we can. Guys, advanced tax is a very simple concept. Advanced tax is not in advance of the previous year, it is actually in the previous year. Advance basically means before the assessment year. So this is your assessment year, AY 22-23. So the government says in advance of this, in advance means before this year, which is the previous year, 21-22, you need to pay some advance tax. So basically advance tax is nothing but pay as you earn. Whenever you earn, as in when you earn, you have to pay. That is called advance tax. The section for advance tax starts at section 207. They say that advance tax is to be paid during the previous year. Next, so everyone has to pay advance tax. Even I, even you, even Mukesh Ambani, even the poorest person. No, they say that as per section 208, 2 plus 8, 10. That's the shortcut, guys. 2 plus 8 is equal to 10. They say that advance tax is to be paid only if your tax liability, after considering TDS, after considering TCS, after considering everything, is greater than 10,000, only then this becomes applicable. That means it is not for people whose tax liability has been taken care on TDS. Example, if you have a job and most of your salary is subject to TDS, so you don't have to pay any advance tax because your liability is not more than 10,000. But if your liability is more than 10,000, you better pay some advance tax. There is an exception to this, guys. If you're a senior citizen, that means 60 years or more, and not having any PGBP income, then you don't have to pay advance tax, is not required. That means, guys, if you're a senior citizen, they don't want you to go through the headache of paying advance tax if you don't do PGBP. But if you're doing business, then why not? You can still pay advance tax. You should pay advance tax. If you can do business, then you can definitely pay advance tax. Next, guys, how do you pay advance tax? The government says that we will collect advance tax in 4 installments. So there is a section called section 211, 2 plus 1 3, 3 plus 1 4. So they say we will collect it in 4 installments as under. There is a shortcut even for that. Just send demanded money. The shortcut says just send demanded money, or Hindi I use the shortcut jaldi se de do money. So just send demanded money. In J, by 15th April, May and June, by 15th June. So in April you must have earned money, May you must have earned money. By 15th June, on an estimated basis, whatever is your tax liability you think of that year, you need to pay. In this case, you need to pay 15%. That means, let's say, example, your tax liability after TDS, TCS is 1 lakh, then you should pay about 15,000 here. If you pay less, you will have to pay interest, but there is an exception here. Up to 12% if you pay, you don't have to pay any interest. That is a leeway, or that is a relaxation, because it's the first quarter only. Then for July, August, September, again by 15th September, you have to pay 45%, not 15 plus 45, you have to pay 15 plus 30, that is 45%. And here also there is a relaxation, that if you've paid up to 36%, then no problem. Next, guys, for October, November, December, you need to pay by 15th December, you need to pay 75%. So 45 plus 30 again, no relaxation here. And by 15th of March, that is almost by the year end, you should have paid 100% of the advance tax, no relaxation here. These are the 4 dates, just send demanded money. If you pay the amounts by these dates, congratulations, no problem. But otherwise, guys, there will be an interest that will be charged. Very simple calculation of interest. Watch out, guys. Let's say in the first month you had to pay 15,000, you paid 13, no interest because up to 12% you paid. but you had to pay 15,000, you paid only 10,000, then on that 5,000 of shortfall, you will have to pay interest at the rate of 1% into 3 months. Why 3 months? Because the next payment schedule will be in September. For this one again guys, the shortfall into 1% into 3 months. In this case again the shortfall, but again here guys there is no leeway, there is no relaxation. So an entire shortfall into 1% into 3 months, and here it is the shortfall into 1% into 1 month. So this is how you need to calculate your interest. This is how you need to pay your interest in case of any shortfalls. Alright, so this is the interest on the shortfall. And guys, who checks this interest? There is a section called section 234C. C, the shortcut is check. So 234C will check every 4 months. It will wake up and it will check, have you paid on time? If you have not paid, it will charge you interest. So that is 234C. At the end of the year guys, let's say we are on 31st March and you were supposed to pay 1 lakh in those 4 installments. So overall advance tax you should have paid 1 lakh. If by chance because of difference in estimates you paid up to 90% of that also, no problem. But if you paid, let's paid only 85,000, then on the balance 15,000 you will pay at the rate of 1% till the return that you file. So this is another interest section. Yes, the earlier one was on installment, this is on overall, and this is under section 234B. B is baad mein guys. First is C, which checks you 4 times, and then is B. B is on the overall advance tax, and remember it gives you a leeway up to 90%. And then guys, this is your advance tax. Anything else? Yes, advance tax is not applicable on 4 things which you can't estimate. So they say that there is an exception. The exception shortcut is A, B, C, D. On 4 things, because you can't estimate them, you can't pay advance tax in advance. But when you earn it, let's say guys it's the month of September and you earn dividend, then you could not have estimated it for the month of June. So in the first quarter, first installment you would have not paid. That is perfectly okay. So these 4 incomes, only when you earn you will start paying advance tax from that quarter. This D is dividend, C is casual income, like you win some money in KBC, B is a business which is new, or A is an asset sale. So guys, these 4 things you cannot predict. If you can predict when you're going to get casual income, then you will be the most wanted person on planet Earth if you can predict all this. So you can't predict all these, and hence the government says that whenever you earn them you need to pay advance tax, as in when you earn dividend, casual income, new business, and asset sale. Let's read. The section is 207, that advance tax is to be paid during the previous year. 208 says that only to be paid more than 10,000 per person, and if you're a senior citizen having no PGBP income, then no advance tax. How do you compute? You first estimate your total income, then you minus TDS, TCS, etc., and then if the balance is more than 10,000, then you need to pay advance tax in 4 installments. Section 211, just send demanded money or jaldi se de do money. Payment schedule 15, 45, 75, 100%. The advance tax that you need to pay has to be rounded off to the 100 rupees. Basically that means if you're supposed to pay 6484, you will round it off. That means the last 2 digits you will ignore, you will do 6400. Next, for the assessee under presumptive taxation, yes, this is also an exception. If you're under a presumptive taxation 44 AD, ADA, AE, then, so not AE, sorry, 44 AD and ADA, then only the last installment of 15 March is applicable to you. And if the last day is a bank holiday, etc., then you can make it on the next immediately day and you wouldn't have to pay interest. 234C checks you 4 times and 234B checks you once at the end, and that is the TC advanced tax chapter, guys. This is what is advanced tax. Perfect. So now what we're going to do, guys, is we're just going to have a look at the different sections that we've done. I don't want to start module right now because we'll be somewhere midway. So let's do one exam question just to test our knowledge. Since we have about 15 minutes, let's do just one exam question. I'll just upload an exam question, and just to test our knowledge, let's do one exam question. So this is DT. In fact, we could do the fast track or the RTP. Yes, let's do the RTP. And in that, whatever TDS is there, let's do that chapter question. Yes. Mr. T, an Indian citizen and a resident of India, earned dividend income of 4,500 from an Indian company, which was declared on 1st October 2020 and paid in cash to Mr. T. What are the tax implications with respect to dividend in the hands of Mr. T and the Indian company? First of all, in the hands of Mr. T, any dividend is taxable, and you know guys, dividend has only one direction, that is IFOS. 4,500 will be taxable. And in the hands of the Indian company, they have to just deduct TDS under section 194K. K is for Kotak mutual fund. No, this is not mutual fund. So this is 194. And here the limit is 5,000 rupees. Only above that you will deduct TDS at the rate of 10%. So most people said that no TDS will have to be deducted. But that is wrong guys. Here the TDS has been paid in cash, and hence such dividend is taxable and the Indian company is required to deduct. So this is the right answer. This was a nice tricky question in the RTP. Let's see what else is there on TDS front here. Yes, there is advance tax here. Mr. Ayansh, a resident individual, is a dealer of garments. So basically he is a businessman. During the previous year, that is 2021, this is not a RTP of your year, this is the RTP of 1 year back. So in the previous year, the total turnover of his business is 1 crore 5 lakhs, out of which 15 lakhs was received by way of account paycheck and the balance in cash. So basically he has a lot of cash payments. Mr. Ayansh does not opt to pay tax as per 115 BSc. So this is, we have not discussed also, and he doesn't want also that. What would be your advice to Mr. Ayansh relating to the provisions of advance tax? So should he pay advance tax or not with the due date along with the amount payable, assuming that he wishes to make maximum tax savings without getting his books of accounts audited. Alright, step by step guys. First up, his turnover is more than 1 crore. And as you know guys, if your turnover is more than 1 crore, then you got to audit yourself under 44AB. And for that you'll have to maintain your books of accounts and get them audited. But he does not want to get his books of accounts audited. How is that possible? There is a section called 44AD, presumptive section. In that, if your turnover is up to 2 crore rupees, guys, the 10 crore limit does not apply to him because he has a lot of cash transactions, by the way, just clarifying. So hence this will be applicable. But if he does not want this, then he can be under 44AD. That means of his turnover of 105 lakhs, 15 lakh is by way of account paychecks. So 15 lakh into 6%, and the remaining 90 lakhs into 8% can be his profit. So you will calculate this and this, and you will calculate the profit. Once you calculate the profit, you will understand that once you calculate these two numbers, on that, as per presumptive taxation, you don't have to pay advance tax all the 4 installments. So whatever is the amount that you're getting, you will have to pay in only in one installment, that is on 15th March. So you will suggest him 44AD. Guys, 44AD is only for resident individual, HUF and partnership firms, not even LLPs, but he's a resident individual, so applies to him. He's a businessman and his turnover is up to 2 crores, so perfectly applicable to him. Alright. And guys, with that we complete the chapter TDS TCS Advanced Tax. In this next session, immediately after the break, we will do the module, every question on the module from this chapter. illustrations also, because very important chapter, and then only then we will go to the return of income chapter. There is good amount of time. Rest assured, let's do this well. All the best, and see you guys now in the next session after the break. If you have any questions, right now is a great time to ask all of that. Thank you.